Okay, good morning, or whenever you're viewing this. It has been a while, one of the longer stretches that I've certainly gone without doing a video and without doing a post as well, given that we've been pretty busy with the training effort this month and actually added a second night session. We usually have a session on Monday night in addition to the 8 or 9 hours during the day, and we actually added another session on Wednesday to accommodate Robin Dane's schedule. And I can't say enough about what she has certainly brought to this effort. She is, as I mentioned before, here as a participating trader to sharpen her own skills. Maybe one of the few bona fide coaches out there that actually trades. But at the same time, she's giving back, like some of us who are trying to give back in terms of sharing with her the psychological side of the business, and it's just been it's actually surpassed my expectations, and it's a lot of work for all of us, but we're having a good time and hopefully making some progress with everybody. And I want to talk a little bit about that in terms of maybe reinforcing a couple of the takeaways. And some of this goes back and is mentioned in some of the prior posts, and I will link in today's post to one of the posts that I did right after the beta effort completed in the summer of 2009. In terms of key takeaways, and of course, if you look down on the blog here, there is also a section where you can get some posts that were done by former students. But it's probably not a big surprise that there are really two things among everything that we talk about that just keeps coming up over and over again, and that we try to reinforce. I try to reinforce. And I still don't see this being taught a whole lot, at least by people who don't really trade. And that is thinking about the other person on the other side of your trade, and what that person is likely going to have to do if you are right and they are wrong. And constantly looking at charts and patterns in terms of what psychology in the market is causing a given move, and can position you for an anticipated move in your favor. And a good example was during Thursday's afternoon session, where we excuse me, we back and filled in the morning, chopped around, consolidated a little bit midday, and then the longer term trends kicked in toward the end of the day. And just kind of walking through from a psychology perspective, not just looking at the chart in terms of, well, you've got an upward bias and trend channel developing that you can trade off of, but at the same time really understanding that, why do markets initially break out, stall, and then retrace, and talking about that in terms of the actual market participants, people that were shorting a prior resistance level after the initial break, that needed to conclude essentially. Then you had some premature shorts probably getting in there, not recognizing the lower horizontal channel had broken. All of that's transpiring to bring price down, and then anticipating the shorts who are incorrect, and the ticked off longs who need to get in that trade, and then the people that tend to pile in after it breaks that next little consolidation point. So really talking through the market flow, bar by bar, minute by minute, in that regard. Which is really how I feel traders need to view the market. So we're always talking about who's stuck, who's on the wrong side of the trade, and what those traders have to do to act, and what that will do to market action. If I were to boil down my philosophy in this business, as it is in poker, that's what it comes down to. And I'm still, to this very day, very surprised that when I talk to traders, whether they work with me or whether we're just having discussions, I'd have to say it's easily less than 5% of the people that I've ever talked to that truly view the market in that manner, and not surprisingly, those are the traders that tend to be successful. So spending a lot of time every day beating that in. And the other thing we've been spending a lot of time on certainly is adding to a position when it goes in your favor, when you get additional confirmation of the move. Now, that's been certainly a bit of a challenge and an art over the past couple of weeks, where we've had fairly limited opportunity and movement. It's been, in my view, a grinding out 2 weeks, but it certainly reinforces the fact that even in markets that on the surface may look a little choppy, if you really understand price action and market bias and tendencies, you can still do fairly well. And this is not intended to be a boast at all, but we have yet to have a losing session in 2 weeks. And as I've told the group, I said, don't view that as a shock or surprise. Just view that as that's what should happen when you are focused and working hard to really understand what the market's doing at any given point in time. Again, it's been a bit of a challenge in terms of being able to add to positions, but the key, as I've said, and bear with my voice a little bit, I've been talking for 2 straight weeks, is that you've got to know how far apart to add. In a market that has fairly limited range most of the time, you're not able to add more than one or two ticks apart. By the time you add, a point or two away, you should typically be exiting, because you're getting yourself into a retail situation versus a wholesale entry. And so a lot of our ads have been 2 ticks away. You get in and get a little bit of movement. It confirms the channel that you're in. Get in 1 or 2 ticks above that. You're still adding incremental profit, even though you're worsening average price. A lot of time I spend in the webinars going through that. And again, that's another concept that I'd have to say a handful of people that I initially talked to ever really understand, in terms of the whole idea in this game is to worsen your average price and add incremental profit in the meantime. So think about that one. So that's a little bit in terms of key takeaways. We've got 2 more weeks to go, so I want to continue to share with the outside world things that we're doing, and that will wrap up in a few weeks. A couple of other updates, if I can, just on a personal note, going through some substantial planning efforts at this end in terms of trading platform. And I'm going to be using the next 2 weeks to solidify what I'm going to be doing. I'm basically at a point where my funds are large enough that I really need to start splitting out accountability a little bit for it, and platforms are becoming more and more key to me. And so I've talked to the folks at Ninja. I'm also going to be having an in-depth conversation with Linda Ratchke and Damon over at Photon this weekend to really take a solid look at what she's been using over the years, and what I know is a very, very solid platform. And I'll get it in the future when I settle on this. I'll get into the whys and wherefores. But I need to become a little bit more efficient, especially with the sizes that I'm trading right now. So that's on the horizon. A quick note in terms of CIO role that I haven't mentioned in quite some time. That's also going to kick into gear in October. I'm going to deal with longer-term fund management, and actually we're going to be doing a lot of work with 401ks. And I'll just leave it at that for now, so you can think about that. Those are really the highlights that I wanted to hit. Not a whole lot new. One suggestion I did provide to the group is it's a good healthy habit every morning, or certainly at the end of the trading day, to empty your office wastebasket, clean your desk. It may sound like a little technique, but I noticed I got in on Friday and I wasn't listening to my own advice. I had papers strewn all over the place. I really hadn't gotten focused. It took me a little while on Friday morning to get my own motor running. But just anything you can do to maintain focus, to keep a clear frame of mind. And lastly, and I guess I've got 15 minutes now on these videos. At some point, YouTube increased their time. Someone let me know that, and I appreciate that. Just a quick comment. I haven't been able to respond to a lot of the email. I still encourage people, if you're going to communicate unless it's really of a personal nature. Feel free to use the blog for that. We've had the comments back open for a while. That way everybody else can see and we can share discussion and dialogue. They are not screened unless they are derogatory or just insane. And the intent is to continue to have good discussions. I did want to just comment a little bit on an email exchange I had with another trader over the last week or two, and on occasion, and everyone certainly is entitled to their opinion, and this is a free country, and those of us that put ourselves out there in the public arena have to expect it to get scrutinized, rightfully so. And I don't normally respond to the very small few that challenge the motives and the intents, but just a quick comment that and I know I've often been critical in the past of educators. What we're doing with this jelly effort is certainly not perfect. I've lived life enough to know that there is no such thing. But I do know that this industry needs quality education, and probably now more than ever. And whether it is with me or with another quality educator out there, I've certainly got no monopoly on this. For those that only started following some of my efforts when I went to live with a blog in 2008, just a reminder that I've actually been teaching in this business formally for over a decade now. And I took a hiatus, excuse me, mid 2000s to focus on my fund management more, but I've been teaching for quite some time, and public, and please be a little cautious in terms of thinking, well, Don had a good year, and all of a sudden he's going to use that to jump into teaching. Then you're really missing the last 10 to 15 years in terms of both performance and in terms of teaching. And again, I respect the fact that everybody has the right to their opinion. And again, what we're doing is not perfect, but it certainly has proven itself in terms of feedback, both from participants and brokers. I certainly look up to those others in the industry that really are trying to provide bona fide education. I put Linda Ratchke, at the top of that list. I think she's done a great deal of good in this business. She's an outstanding trader. She has also given back to the industry, and I could throw some other names up there too. So I guess a cautionary note for those that may not be involved in the effort and may not know what we do over the course of the day. There's certainly a fine line between letting people know that there are quality efforts out there and overly marketing something. It's been a tough balance at times. I'm going to be cutting back on when I do these. If I do them again, certainly no more than twice a year, maybe just once a year. But I've got a fund to manage. That's my first and foremost priority. I've enjoyed the teaching. It's a passion of love for me. But I've got a fund to manage, and I've got other things to do as well. So again, just some perspectives at this point. I also appreciate all the positive feedback and support that we've been getting over the last several years. And I thank those of you. If I've not been able to get back to you via email, I do appreciate that. So we'll continue to try to put up interesting tidbits to help you become better traders on the website. Certainly no charge for that, never one intended. That's about what I've got for now. So have a great restful weekend. Back at it Monday, FOMC on Tuesday, and Jellies will see you in the room on Monday morning. So please rest up, and we'll see everybody later. Take care.